Hello and welcome everyone to the live commodity market analysis with the Gold and Silver Club for the 2nd of February 2017, presented by myself, Phil Carr. Now, during the course of today's session, we will be covering live market analysis. We'll be going through a watch list of trading opportunities. We'll be going through a forecast of where we expect gold, silver, oil prices to be heading next, answering questions, and also we will be going through our top trades of the week as well. So just before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Now, we will get straight into it today. I'm sure a lot of you will be aware who trade the precious metals that gold today has broken out to the highest level in 2017. We've seen a surge over the course of this week. We had the FOMC statement yesterday, which was a little bit of a non-event. However, in the background, we've of course had a lot of movement into the precious metals on the back of President Trump signing an executive order that essentially stopped entry of all refugees to the United States for 120 days. Now, this has been monumental. We've seen this have certainly a big impact in the markets over the course of this week. So I'm sure a lot of you are aware President Trump has put a travel ban on citizens from 7 Muslim countries around the world. He's blocked entry into the US for 90 days from citizens of 7 predominantly Muslim countries, which has included Iraq, Iran, Libya, Somalia, Sudan, Syria, and also Yemen. He's also fired the acting US Attorney General for refusing to enforce the order. And with this, we have seen gold break out to the highest levels here, the biggest surges since Brexit. Over the course of January, gold surged 6%. It moved just under 1,000 points over January. And so far in February, we have had a very strong start. So already just within a couple of days, we've seen gold break out over 300 points. So we'll have a look at that on the chart very shortly. It's breaking out right now. It's above 1,220 US dollars per ounce, and it's gold's biggest gain here since Brexit. And of course, what we're seeing at the moment is more uncertainty in the markets, more volatility, which of course then sees the precious metals bid up as a safe haven. Now, to give you an idea of month-to-date relative performance, it has been an incredible start for commodities. We've seen big surges. Most notably, palladium is the best performing market so far in 2017. It's up over 11%. Platinum is up 11.5%. Silver is up just under 11% at 10.8%. Coffee is up just under 10%. Cotton up 9%. Copper up 8%. Sugar up 7%. Gold is up 6%. So really, if you're not making money at the moment with commodities, you definitely need to look at commodities. You should be. And we'll, of course, help you out here. We'll go through some analysis during today's session, and we'll provide you, of course, with an opportunity for those of you who would like to join us at the Gold and Silver Club to get our regular analysis on a daily basis. You can also get access to that as well. So what we'll do, we'll go over to the technical analysis. We'll look at the charts here. We'll start off first of all with gold. So we've got an open position on gold at the moment. We've actually re-entered into this trade just yesterday at 1,200, 1,200 US dollars per ounce after we took profit at the resistance levels at 1,219, around that zone, which is where we saw gold break out to for the January effect rally, where we bottomed out in mid-December after the FOMC statement, after the US increased interest rates. And with that, we've had a very similar move to what we saw back at the end of 2015 with this rally over January. And we've had a pullback. If I explain it to you in the context of what we're looking at the moment, and for those of you who've been following us for a while now on FX Street, you'll be very aware of the updates which get provided possibly via YouTube, Twitter, and so forth. And last week, the previous week, we talked about gold that we expected to decline back towards the 1185 zone. Then we saw that. And then last week, we talked about where we were looking for gold to potentially come back and here pull back towards the 1180 to 1175 zone, which was the 50-day moving average and the lower end of the trend channel and an important Fibonacci level. We bounced off that level last week, and since then we bounced off that level on Friday, formed a bullish rejection candle into the close. But this week we've had follow through, and now we have confirmation that that was just very simply a corrected pullback within an upward trend. We've bounced off this key level of support. We've seen additional confirmation over the course of this week, broken and closed above Friday's high, had another close above Monday's high on Tuesday. On Tuesday into the close, we tested the upper end of this resistance channel here where we had a pennant formation, and today we've gone and done it. We've broken above 1,220 US dollars per ounce here for gold. A really nice basing formation. We've just hit the 100-day moving average, which is at 1,225 US dollars per ounce. A break above that, I see clean air up to 1237. Above that, 1250, and then above that, 1278. So those are the major zones that we're looking at on gold right now. If you go over and have a look at gold based on a weekly chart at the moment, you will see gold has now taken out last week's high and the week before that. You've got a classic V-shaped reversal pattern on higher timeframes here, and I'm looking for higher prices here. At least a retracement up to the 50% Fibonacci level, which if you go back, you can just add that onto your charts. I'm sure a lot of you have got that added already who trade gold, but very simply go back to the lows here from the FOMC statement in December, the lows that we put in around 1,120 US dollars per ounce, and then stretch that Fibonacci retracement level up to the highs here over Brexit. We're found resistance. We've ricocheted between two levels around 1180 up to 1219. Now we're breaking out, and I'm looking for a move at least up to 1248 zone in the short term. How you want to re-enter this trade, of course, is entirely up to you. For those of you who trade gold, you might have a position on already, but certainly we've got a trade on at the moment, and we're looking for a breakout towards that zone at the moment. If we get a close above 1,220 US dollars per ounce, it bodes very well for gold here in terms of upside momentum. We've got the potential to break out significantly higher in the coming days. Now, the wild card could be non-farm payrolls tomorrow, and possibly we'll see profit taking ahead of that, which is quite usual to see some sort of profit taking if we've seen a rally prior to that. But then non-farm payrolls could be a catalyst again for additional moves here on gold, the precious metals, for further breakouts. If we look at the US dollar, after breaking out to 14-year highs at the beginning of the year, has slowly but surely continued to break down, lower highs, lower lows, and we've seen this overall correction now really gain momentum over the last week and a half here. We actually popped below the critical level of support, the 99.50 level, and broke below the 100-day moving average today, which could lead here to corrective move, a further corrective move lower here for the US dollar. And of course, we're seeing a number of commodities rally against the US dollar inversely at the moment. So that includes sugar, coffee, silver. In fact, silver is well worth having a look at on multiple time frames. So silver, if we go over to the monthly, it's important to note that silver's monthly close over January was one of the best that we've had over the last 6 months. And I would argue here that on the monthly time frame, we had a huge pennant formation, which broke out in 2016. Over the last 6 months after Brexit, we've been correcting for the last 6 months here. We've come back down to underlying support, trend channel, also the 76.4 Fibonacci retracement level. And with that, we've then got a bounce at this level, and we've now got a potential much larger bull flag development here on the monthly chart where we could see this ramp up, and this could be due for the next leg higher here. So that's what I'm looking at on higher time frames. Of course, that will take quite a while to work itself out. On the weekly chart, we're breaking above the upper end of this resistance channel, so we're starting to break out. We've got clean air above. I am looking for the next level here for a breakout back up towards $18.50 per ounce here on silver. Looks like we've got a bottoming formation. You could also look at that as a head and shoulder pattern, inverse head and shoulder pattern, which is in development at the moment. You've got essentially the price structure, which is developing with a bounce off the 50-day moving average as well. So these MAs are being followed very closely here, and you can see corrected pullback back down to 50 MA that held, and now we've got the next level neckline broken, and essentially silver is up and running here. Now, another market you also want to bear in mind, which is also a breakout at the moment if you trade the soft commodities, is sugar. Sugar, the last time it broke 21, if it closes above 21 like this, it led to a breakout to 4-year highs in 2016 between September through to October. It was a significant breakout, meant that sugar at that point was up over 40% for the year in 2016. It is an important level. Sugar has struggled on 2 occasions this year to close above 21. If we close above it today, this opens the door up to higher prices. Looks like just a continuation pattern where sugar broke out 7% in the first week and a half of this year, consolidated sideways, and now looks like it's just a consolidation continuation pattern, and we're getting ready for the next leg higher up towards the 22 to 23 zone. So I would also have sugar on the radar at the moment as well. Now, of course, with gold and silver breaking out, platinum has also started to build up a base here, which will be correlated, and so has palladium. So palladium is also, after last week's pullback, back towards the lower end of this support channel. We have got another bounce here, a V-shaped reversal pattern, and building up momentum. But I favor at the moment the gold trade, which we've re-entered yesterday for more upside here. We could just come into some temporary resistance, hit the 1,225 level here in the short term. On the first attack of the 100-day moving average, possibly would just come into some resistance, but then further moves, potential breakout tomorrow on non-farm payroll. You've got a V-shaped reversal pattern breakout, would lead to higher prices. I'm certainly more inclined to suggest upside here as opposed to pullbacks. We've really got what we needed to see here, a break above 1,220. What would bode even better here, just for more upside for gold, would be a close above 1,220 US dollars per ounce. If we do that, then we should really start to see gold break out higher and continue to surge. Now, another market which we're following closely and tracking at the moment is oil. I find oil very interesting at the moment, the overall price structure. What I would be aware of at the moment on oil, go over to the weekly chart. And if you look at the weekly chart, we've been stuck in a consolidation with oil now going back to December and January. We've been moving sideways. And you could argue, okay, oil's breaking out, but it's come up for a retest of the upper end of the trend channel, and it's horizontal. It's just stuck at the moment within a range. The bulls have the upside today, certainly. We're stuck in this range, but I do see, in terms of trading opportunities from a risk to reward perspective, there's more downside opportunity here than upside, especially where we're seeing net long positions get a bit exhausted at the moment, where they're at the highest levels in over a year. So I would look at this as definitely right now, bulls are in charge of this market short term today. If we don't get follow through, so if oil is unable to break and close above $54 and approximately 55 US dollars per barrel, if it cannot follow through and it just comes up to resistance and rolls over again, then that will probably be a failed breakout. Now, on the daily chart here, you can see it's broken above resistance, some resistance. It's still got a little bit more work to do, break above $54.85 a barrel. Otherwise, it will have a potential failed move, and we'll just see it ricochet back down to support. It will roll over again. What is in the favor of the bull market at the moment? Well, of the bulls, of buyers right now. Well, we have got 2 days of higher highs, higher lows, and closes which are above key support at the moment, so that's in favor. Also, oil right now is above all of its key moving averages, so it's trending upwards, and it's been in a sideways moving consolidation pattern for the last month now, so that bodes well for buyers right now. What is discouraging for buyers at the moment? I would say that we've had a number of attempted breakouts for oil where it's not been able to sustain above resistance, and really we should have broken out by now from this level of overhead resistance. Even last week on Thursday, we had another breakout higher which didn't follow through. The bears took the market back down again. We've had a number of tests of overhead resistance which haven't followed through, which have resulted in closes back below resistance here. For the bull case, it's been difficult to get follow through. Normally, the way oil moves is it will consolidate, and then within a few days, it will have these big breakouts and surges. It's not that promising, the fact that today, even now, oil is retracing again. You would normally expect a lot more follow through on a breakout. You would see it surge and just keep breaking out. And if it was going to be a stronger follow through, it should already be at 55. Should already have hit the monthly pivot above here, and the fact that it's really starting to slow down again here during the US session, you can see it's starting to pull back again, go to tighter time frames. and you can see it's struggling yet again here to follow through. So I'm neutral at the moment on oil. I would say overall chart structure looks more bullish than bearish, but I wouldn't be a buyer of this market just yet. You could argue there is a box setup and it's a consolidation setup for a continuation pattern, but I would be a bit wary of oil here unless it can close above 55 US dollars a barrel. Then I suspect we could be on for the next leg higher. Otherwise, sitting on hands, waiting to see how this structure on the weekly chart develops and whether we get a break and a close above that. So essentially, if you go over to a weekly chart for oil, you're ricocheting between support and resistance. If oil breaks above $55 a barrel and on a closing weekly basis, that will be the highest close it's had over the last year. If it closes above 55, then yes, you've got the signal to go long. If it can't do that, I would sit on hands and wait for a clearer signal. And certainly we're seeing a number of other markets displaying opportunities to enter trades at the moment. Now, also, what I would put on your radar is the grains at the moment. Wheat had certainly a very strong surge to the upside yesterday. Corn as well had a significant breakout to the upside. So we've had another surge off the lower end of the trend channel. And I would also have soybeans on the watch list. Soybeans will reopen again in 11 minutes time. And we can see here, actually, you've got almost a classic bull flag formation forming here. If soybeans follows through today after the bullish engulfing candle it formed yesterday, that was a bear trap as well, the way it's developed. I would look at soybeans for a potential breakout to the upside here as well. Quite a nice risk to reward, actually, on soybeans at the moment. If you have a look at the overall stop loss and entry levels that you would look at for a potential breakout trade here, could be quite nice. So I would have a look. Also, I would have that on the radar right now. If you trade the grains, soybeans is worth just a look at the moment too, as well as sugar, which is continuing to break out. So certainly we've got a lot happening at the moment. There's a lot of volatility. It's providing a lot of opportunity. I hope a lot of you have made some money over the course of this week. And what we'll do, we'll talk you through our top trades over the last week, our trading performance update using our exclusive research-driven strategies. Now, the top trades over the last week have included as follows. Now, gold, I haven't put that we've exited this trade because we haven't. We've re-entered into this yesterday at 1200. We are up on the trade approximately about 250 points just before the session started. Gold was trading just around 1,225 US dollars per ounce. So we've re-entered gold on this surge higher. Now it's broken back above 1,220. We're looking for higher upside targets, as just mentioned there, between the 1,250, 1,250 up to 1,275 US dollars per ounce. So that trade is currently 250 points in profit. Last week, we capitalized on a very overbought condition with palladium, simply took a sell short after it had a failed move above resistance. They produced a rejection candle. We benefited with a quick 470 point move, quick breakdown in profit, which actually breakdown in price, which actually ended up being one of palladium's biggest one-day moves to the downside in 10 years. Quite extreme, but then it got very overbought. It was up 18% in 4 weeks, which is a very large increase. Currently, it's up around 11% for the year. Cotton, we've also capitalized on this wedge pattern, also a breakout from resistance over the last week, 320 point move that we've come out of now. As you've seen, we've just come back up to swing high, back at resistance, a quick trade on there and banked our profits on this position as well. Now, if you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, you can, of course, get exclusive access to our private members live trading room. All you need to do is go to www.jointhegoldandsilverclub.com, complete the application form. We'll get in touch with you ASAP. Just make sure as well when you make an application that you do mention that you've been on this FX Street session, or if you're watching the recordings on YouTube or the FX Street website, just mention that you've been on FX Street. That would help us a lot. And also, who's it for and what do you get as part of this program? Okay, so just to give you an idea, the private members live trading room, it's for those traders who might be absolutely new and you just want to develop a solid understanding of the markets and really fast track your results. You don't want to go through a lot of the slow process of trying to do all of this yourself. Or if you're an experienced trader, you might be experienced with Forex, you might be experienced with equities, or you might have some experience trading gold and oil, but you want to really just take your trading to that next level. The private members live trading room is definitely for you. The private members live trading room includes trading strategies. You can go through our online trading course, so you get the quick start guide to commodities and our 4 core strategies as well, exclusive weekly live trading room webinars during the week and recordings of every session, live trade recommendations ready to implement. So we provide real-time notifications with our exact entry, exit, take profit that we're getting into, so you don't miss out on trades, details of where to enter, exit, place a stop loss. You get the inside track, a week ahead trading plan with a trade watch list every week, VIP support and mentoring directly from our senior traders, and access to our Private Traders Academy members website with all of our resources. Okay, so you get all of that by being a member of the Gold and Silver Club. Our live trading room webinars, essentially during those, you can watch the Gold and Silver Club expert traders analyze the markets right in front of you, picking out highly profitable trade setups, sharing exact entry, exit points, providing you with our profit targets, our stop losses. You get to see everything that we're doing ready to implement for instant results. You get notifications via email and SMS, so you get real-time notifications alerting you when to enter a trade. Those include exact details of where to enter, exit, place a stop. All notifications are sent out in advance notice, and it's essentially the exact trades that we're taking at the Gold and Silver Club. And you get access to commodity research and market insights. So private members get exclusive access to our proprietary trading research and market insights to help boost your win rate and ensure you're getting on the right side of trades. Our research is there to give you an edge in the commodity markets and really fast track your results. So again, private members, they get the following. You get the trading strategies, our online training course. So 4 trading strategies, exclusive weekly live trading webinars, which are also recorded. So if you miss a session, you can get the recording afterwards. Live trade recommendations ready to implement. You just get all the exact trades that we are taking at the Gold and Silver Club, including entry, exit, profit target, inside track, a week ahead trading plan every week with a trade watch list. VIP support and mentoring, very important to help you each step of the way directly from our senior traders, and access to Private Members Academy website as well. So again, to get exclusive access to the Private Members live trading room, just go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Fantastic. Okay, good. So with that, guys, I wish you a very profitable day's trading. There's lots happening at the moment, so I hope you're making some money today, and very much look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club. So with that, wish you all the best. Take care. We'll speak to you very soon. Thanks, guys. Bye-bye.